Hey guys, this is Justin from nextbigtrade.com. I wanted to talk about this article I saw on BNN Bloomberg today because it really struck me how different the sentiment of this article was compared to what has been going on with the cannabis stocks. I tweeted the link to this article on my Twitter page, and basically the title of this article is Stay Away, Bay Street Cautious on Pot Stocks. And what they did is they interviewed a bunch of investment managers in Canada, and we're discussing what their views are in the cannabis sector. And you can even watch some of the videos on some of these interviews on their website. And this guy says right now the cannabis stocks are worth nothing, but these guys all use the same type of analysis for what they do in choosing investments. And these guys are all people that are educated the same way. They're all wearing suits and pictures, and all their comments on why to avoid cannabis stocks are all kind of similar. I mean, they're all talking about they're overvalued, they don't have cash flows, um, valuation, just lack of fundamentals. These people are interested in modeling their business and doing a lot of financial analysis, fundamental analysis, and that's why they all kind of come to the same conclusion that a lot of these cannabis stocks don't have very much revenue yet. This industry is like very new, and a lot of very dramatic things are going on in the space right now, and they just don't really fit into the type of investment modeling these people do. So they all have to come out against it. And then what's interesting about the end of this article is they ask a question: what's your strategy if your portfolio manager won't touch pot stocks? Trust the portfolio manager to protect and grow my assets, or I'll find another portfolio manager. And it's about split half and half, with some people saying that they'll just find another manager. But unfortunately, if they find another manager, I guarantee they do the same type of analysis, because these people were all taught the same stuff. And when they're looking at fundamentals, they're all going to kind of analyze the same stuff and probably come to the same conclusion. And this is, to me, this ties so well into why I chose stage analysis as my fundamental method for trading. And you can even go back to like 2008 for me was a big year, because I didn't do well in the markets that year, and I actually had started reading this book that year, but it took me a number of years after 2008 for everything to really come together. And not just to understand stage analysis, but to actually apply it in my trading. And it's one thing to actually know how a system works, but to actually use it and stick with it. Once I did those two things, that really took my trading to another level. And if you're watching my videos and reading my website and you haven't read this book yet, I think the first thing you have to do tomorrow is buy this book on Amazon and read it, because I think it'll change your trading career the moment you read this book and you understand what he's talking about in this book. Because, like, to be honest, like, the average trader or investor doesn't have the time to do the type of analysis that those fundamental managers are doing. And when it comes down to it, the cannabis stocks are some of the biggest winning stocks this year. So the fact that these guys are missing out on the biggest trades of the year, that's not even really a strategy that I want to be a part of. I want to be in a system that allows me to identify the biggest trades year in and year out, because my goal really is to outperform the S&P 500. I mean, I can easily index invest and just basically have my return do what the S&P 500 does every year, and that's fine. Indexes will drop the poor performing stocks out of the index, and you'll just year after year, besides the bear market here and there, your money goes up over time. But my goal when picking individual stocks is to outperform the market. And in my opinion, the best way to do that is to use a trend following system. And the best system that I've ever read about is stage analysis, which is outlined in this book by Stan Weinstein. So again, like if you haven't read this book yet, you have to go read it, and I guarantee it'll change your trading life. It has for me at least. Now, just to go over, what the system is all about. All it is about is just buying low, buying out of a stage one base, riding a stage two uptrend, and then selling, when the stock finally rolls over and goes into a bear market. So we're not trying to pick stocks we're going to hold for the rest of our life. We're just trying to ride bull markets, ride big trends in the market, and get out when they turn around. And I add one more wrinkle to that in my own trading where I trim and sell partial positions when stocks get too far extended from the moving average to add more cash to my account and to lower my risk. So every time I see stocks get too stretched from the moving average, I'm selling into that strength and adding back on the dips when the risk reward is better. But overall, when the trend changes, that's when you finally get out and you look for another sector to invest in, or maybe you go to cash and ride out a bear market on the sideline. So if you look at like Bitcoin, for example, it's impossible to value Bitcoin. And actually, I didn't trade Bitcoin very well last year, even though I'm very well versed in stage analysis. But I even let my own bias against Bitcoin kind of deter me from doing as well as I could have in this sector. I did trade some Bitcoin stocks last year, but I mean the amount of profits that could have been made in these stocks and that were made by people was unbelievable. Because this trend was so huge. And to trade the Bitcoin using stage analysis, I mean Bitcoin broke out in late 2016 into a stage two advance and didn't look back. It never violated the 30-week moving average all the way until the top around 19,000. So all you had to do was get in after the breakout and ride this trend, and like 7 or 8 bag, 9 bagged your money, even when it was up to like 1 or 2,000. And again, what I try to do is when the market gets too far extended from the moving average, I use this indicator down here to show percent wise how far I am from the moving average. And a couple times Bitcoin got to around 100% above the moving average, and you can see how it pulled back closer to the moving average after getting too far extended. But the stage two uptrend wasn't over until it went parabolic in late 2017 and finally topped. And now you see people still interested in Bitcoin, but it's in a stage four bear market now. So, I mean, it's possible that this goes into a stage one and continues to base out and breaks out again, or maybe Bitcoin goes to zero. I don't know what's going to happen, and I'll be prepared to take action in Bitcoin if it does break out again, or just avoid it if it stays in a stage four downtrend. But that's how simple stage analysis is. It doesn't require a bunch of fundamental analysis, cash flow modeling, valuation, all that stuff. All it is simple trend following, putting up price and volume on a chart and using a moving average. That's it. And you can trade profitably using that system. So if you look at Canopy Growth, I mean, this stock broke out above the 30-week moving average in September-ish 2017, and really hasn't looked back. It's kind of retested the moving average a couple times, and a couple months ago before this big breakout occurred. But this stock has been in a stage two advance for over a year now. And again, when the stock gets extended from the moving average. I took a lot of profits in the cannabis stocks back in late 2017 and early this year when I went almost entirely to cash um, before the big plunge in January. You can see information on that on my website at nextbigtrade.com. Um, but even if you would have held during that plunge, it still didn't really violate the moving average, and honestly, holding this entire time has reaped big profits. You're up 5 times just by holding the stock for over a year. The same thing with Kronos Group. Now, this stock, after the big run up last year, had a long consolidation, but still, I'd look at this as like a stage 3 potential top where it was starting to break down a little bit, but then it launched back into a stage 2 advance, when all these stocks started breaking out on huge volume in August. So, again, you know, what's interesting going back to that article is all people want to do is invest in and trade big trends in the market. And with a little education, it's really not that hard. I mean, trading and investing is a hard endeavor. It's psychologically difficult, and it requires research and a little bit of hard work. But as far as systematizing trading, like it's you can make a trading system out of price action, a simple moving average, and volume maybe, and that's all stage analysis is, and it works great. I think for anybody that really wants to dig into it. So hopefully this video helps. Like I said, definitely go read Stan Weinstein's book if you haven't read it yet. And you can always go to my stage analysis page at nextbigtrade.com. I give kind of an outline of the system, and I definitely plan on writing more about this system in the future. And what I really want to do is go back and look at a lot of past bull markets and really get some good research out to a lot of my readers at some point, hopefully in the future, on how this system could have been used in a lot of past bull markets to do well in the market. So thanks again, and if you haven't followed me yet on Twitter, it's at NextBigTrade, and if you like this video, please give me a like and subscribe as well. And also, if you got any comments about stage analysis, I'd love to hear them in the comment section.